All right, that is some important opinion coming in on the way markets could move in 2023. But let's also bring you the final update on our global market wrap this morning. We got quite a mixed handover from Europe. So the French CAC index was down around 15 points. The German DAX index, like you can see on your screen, was also around 50 points lower at the close. But the British FTSE was the one where we did see a little bit of a gain, 48 points higher on the FTSE. In fact, in some important data, we had France, Spain, Italy. All of these have reported a slowdown in the annual rate of inflation this week. This is, of course, largely fueled by a drop in energy bills due to government support. Remember, Germany had also reported lower than expected inflation, and exports in Germany fell unexpectedly in November in the face of high inflation and market uncertainty. So exports were actually down 0.3%. This is versus expectations of a 0.2% growth that we would see in exports. So that's what's happening across the European markets. And that's everything that we're tracking globally today. But let's talk about all of the cues and stocks that you should track as we get into a fresh trading session. We have our research team here with the trade setup. Nigel, Vahishta, Rima, all join me now. Guys, a very good morning to all of you. Rima, coming to you first for the market cues. The handover definitely is weak today.
Absolutely. And hi, good morning. So let's start with the top-down cues. Wall Street ends lower, down 1 to 1.5%. The ADP private sector jobs data shows that the jobs monthly addition continues to be very strong. And this is despite so many headlines, whether it's from Amazon or Salesforce yesterday, which seem to suggest that job cuts are accelerating. But despite that, the jobs market continues to remain very hot. And when we are in a rate hiking cycle, good news is bad news. So which is why when the strong ADP private sector jobs report came out, we saw Wall Street sell off and we saw the US 10-year bond yield also spike up. We await the monthly non-farm payrolls report for the month of December, which will be out post-market hours from an Indian market point of view. The SGX Nifty is suggesting a decline as we begin trade with. But remember, yesterday on the weekly options expiry, markets saw a spike in the last 1.5 hours of trade to almost end at that 18,000 mark. So one key level to watch will be yesterday's intraday low, which is 17,892, which also coincides with the 100-day moving average. Can we defend that level, 17,892? And if that's broken, another level to track will be the 26th December low of about 17,776. The dollar index, remember, has spiked up. When the dollar index rises, it's negative for emerging market flows. And we've started seeing the FI outflows also pick up in the Indian market. So yesterday, the FI sold in the cash market for the 10th consecutive session. And the selling was to the tune of 1,449. The sell figure by the FIs is less than what we had in Wednesday's trading session, but it's still a large sell figure. Earnings season kickstarts from tomorrow, so that's going to be dominating the headlines. But for today, expect the action to come top down. Back to you.
All right, Rima, thanks a lot for taking us through all of those cues. By the way, take a look at the SGX Nifty. We have seen a little bit of a recovery there as well, just at the flat line right now. Let's also talk about the individual stocks you should have on your radar as we get into this trading session. And Vahishta is here with that entire list. Vahishta?
Hi, good morning, Pavitra. Let me start off with L&T, wherein its subsidiary L&T Realty Developers has entered into an agreement to sell the entire stake of 99% in a subsidiary, Think Tower Developers. Now, the entire stake is being sold to Mr. Pratik Kalsaria, who does not belong to the promoter group. Think Tower Developers has not commenced any commercial operations as of yet. Moving on to Ambuja Cements, which is incorporated a wholly owned subsidiary, Ambuja Resources. Next is Bajaj Allianz General Insurance, which has the December business update out. The gross direct premium underwritten is at 1,200 crores, and in fact for the 9 months of the ongoing financial year, the gross direct premium underwritten is coming at 11,700 crores approximately. Moving on to Aster DM Healthcare, where the group CFO Srinath Reddy has put in his resignation with effect from today. IDBI Bank, the SEBI has given its approval for reclassification of the government's shareholding in the bank as public after its stake sale. RVNL, in a joint venture with ISC Projects, gets a letter of award from the Gujarat Metro Rail Corporation for an award for approximately 160 crores. And the last stock is RHI Magnesita, which has received an approval from exchanges for acquisition of refractory business of Dalmia Bharat Refractories for 1,700 crores.
All right, Vaishta, thanks a lot for taking us through all of those individual names we should track. Finally, let's also talk about all of the cues from the futures and options space. Nigel is here with exactly that. Nigel, yesterday was quite shaky. How's it looking today?
Well, yesterday, in fact, maybe the weekly expiry played out to the benefit of the bulls. And I say that because, we did see some bit of covering in the final hour of trade itself. And for at least yesterday, it seems the bulls, they dodged the bullet and they live to fight another day. The Nifty Bank, that was the problem pocket. Is this a new trend, or are we like to see a bounce yet again? Because yesterday it was off color, though in the last hour of trade it clawed back to end around the 50-day MA odd. The flows have been a little bit weak. The FIs have been selling for the last 10 sessions. They've sold close to 11,500 crores odd. And the other problem is the institutional numbers. They have been delivering net sell numbers. The last 2 days it's around 1,700 to around 1,800 crores of net sell from institutions. But otherwise, in 7 out of 8 sessions, they have been sellers. What did the FIs do in the FNO market? Well, they covered some shorts. In trade yesterday. Yesterday, close to 12,000 short contracts were covered out, and there were 5,000 long contracts that were added. And now the long short positioning is at around 41 to around 59% odd. We were talking about some short covering that could take place yesterday, and that's precisely what happened. Now, call writing is very, very aggressive. 18,200, 18,300 odd. So I don't expect the Nifty to get past the 18,250 in a hurry. On the downside, though, there was some semblance of buying. The 17,700 put, the 17,600 put, well, they opened up yesterday. So there was some buying being seen out there. But at the 18,000 put, there was some bit of writing that was seen out there. And that's giving you some bit of hope that maybe yesterday's low of around 17,900 odd should hold out. That coincides with the 100 DMA, and that's the crucial support zone. The SGX Nifty is suggesting a bit of a flattish start. I think intraday you get a bit of a dip, and then risk reward could favor you with yesterday's low. 2 stocks to track. India Bulls Housing Finance, that's coming to the FNO band, so keep an eye out on that one. And PFC, it's been moving with good amount of traction. For this year itself, it's up more than 10%, so keep an eye out on that one. Back to you.
All right, that is how the trade setup is looking this morning. Nigel, Vahishta, Rima, thank you very much for joining us and prepping us up for this session. With that, it's time for our first short break on the show. But on the other side, the SEBI says it will recognize the government's post-sale stake in IDBI Bank as public shareholding. More on this when we come back. Hey guys, welcome back. You're still tuned into Power Breakfast. Here's some important news now. Market regulator SEBI has agreed to reclassify the government's residual stake in IDBI Bank as public once the government succeeds in selling a portion of its stake. Remember, the government holds over 45% stake in IDBI Bank and is looking to sell around 30% of that to a new investor. LIC will also be offloading around 30% of its share in the bank. However, this reclassification will take place provided the government's voting rights do not exceed 15%. So that is something important to note. This will also make it easier for the new investor to meet SEBI's minimum public shareholding rules. That's not all actually coming through. The government is also expected to further clarify on the extended window that the new buyer will have to meet minimum public float rules. Remember that the government had recently amended the MPS rules as it applies to central public sector enterprises, government-owned financial institutions, as well as banks, giving them an extension. So these amendments effectively overrule SEBI's standard one-year window. So that is some important news coming in, and we'll keep bringing you updates on this as well. The other story that we're tracking is that as crude prices hover around the $80 a barrel mark, the windfall tax imposed on crude and petroleum products is unlikely to provide the government with a significant fiscal cushion. Earlier, estimates had pegged benefits from the tax at between 30,000 and 40,000 crore rupees, but sources now say that this is currently under pressure. They add that the tax mechanism is likely to continue even if levies become nil. So on the back of falling oil prices, we have Sapna Das, who's here with the exclusive details on this story. Sapna?
The government is unlikely to bank on windfall tax accruals as a significant fiscal cushion. In government's view, had Brent crude oil stayed at $120 a barrel, around the same level when the tax was first levied, the revenue gains would have been significant. But currently, Indian crude oil basket is below $80 a barrel, denting expectations of substantial gains. The government now expects to garner roughly 30 to 35,000 crores March end via the windfall tax. One view also is, on a net-net basis, actual revenue gain could be further limited to 20 to 25,000 crores. This is because the government is likely to lose out on corporate tax collections from oilcos, the largest contributor to corporate taxes. Even if the government is able to net that 35,000 crores, there are already claims against the mop-up. Government-owned OMCs have already been compensated by 22,000 crores against their LPG losses. Further to that, the government is currently discussing compensating OMCs for their petrol and diesel losses too. Estimated losses arising due to the price freeze on petrol and diesel are pegged at a massive 45,000 crores. However, one view within the government is that they do not have the fiscal space to compensate OMCs yet again. But discussions are not closed yet. Officials also say it would be difficult to have a clear-cut revenue target on windfall tax, simply because the price swings on crude oil and cracks are too many. At best, windfall tax collections can be subsumed into the overall excise kitty without a separate budget head. Also, the government forgo 1 lakh crore in excise revenues when it slashed duties on petrol and diesel in May last year. To an extent, the windfall tax could be used to plug that gap. All in all, it's likely that the government will continue with the windfall tax mechanism even if levies become nil due to fallen crude oil and commodity cracks.
All right, Tapna, thanks a lot for bringing us all of those details. Something else that we're tracking, the Finance Ministry appointed Committee on Private Equity and Venture Capitalist Investments has submitted its report to the government. They've recommended ways to accelerate the flow of investments into startups. Now, this report has also recommended ways to ease the regulatory burden as well as changes to direct and indirect tax structure in order to attract more investments into this space. So, Parikshit has more of the details from this report.
Yes, this report was prepared by a committee headed by former SEBI Chair M. Damodaran and had former members of RBI, Finance Ministry and economic experts. It was submitted to the government on the 19th of December. Currently, the Department of Economic Affairs is examining the report. We learned that the government could consider these recommendations for the budget as well, especially on the direct tax side. The report has exhaustively recommended measures to remove regulatory friction and accelerate PE/VC investments. One of the focus areas was to recommend ways to support capital needs of startups in a volatile environment. Among the recommendations, the committee has said that fund managers should not be burdened with GST on carried interest, and the tax should be imposed at the investor end, and the fund manager should be considered as a pass-through. Also, fund management service provided to foreign investors should be treated as a deemed export, and foreign investors should not be asked to pay 18% GST on availing service of domestic fund managers. The committee has comprehensively looked at requirements of global funds and held consultations with the DPIIT, RBI, SEBI and the DEA as well.
All right, Parikshit, thanks a lot for bringing us all of the highlights from this report. With that, we have to get into a short break now. But on the other side, we're tracking all of the cues from the commodity market. So stay tuned for that. Hey guys, welcome back to Power Breakfast. As promised, let's talk about the commodity space now. Manisha joins us with an update. Manisha, good morning. What are you tracking today?
Well, I'm looking at the gas prices where we've seen yet another 10% of a decline in the overnight market. So with this fall, now the U.S. natural gas prices are trading at a one-year lows. They are trading below $3.8 per MMBTU. And after 35% of decline in the month of December, we're down 18% in the month of January as well. The U.S. inventories data that came in yesterday shows that the draw has been lesser than expected. There is lower heating demand. There is warm start to the northern hemisphere winter, and Europe is seeing record high temperatures. And then the restart day of Freeport LNG export plant also says that the domestic availability for gas is on the higher side. It's a similar situation for the Europe gas prices, which have continued to decline even sharper. For the month of January now, the Europe gas has declined by 25%. The UK gas price is down by 20% as well. So energy is one area that continues to see very heavy profit taking. But profit taking is what we are seeing in gold and silver prices also. From the highs, there's a bit of a retreat here as well as the strength in US dollar weighs, and the weak demand for industrial metal also continues to weigh on silver.
All right, Manisha, thanks a lot for getting us that roundup of what's going on in the world of commodities. With that, we're going to wind down on this edition of Power Breakfast with the news that the Asian markets are quite mixed after that weak handover from Wall Street. The SGX Nifty is absolutely flat, just around 5 points in the red. Thanks for tuning in. Bazaar Morning Call is up in 2.